Hey everyone, Zscaler stock is down 31% year to date here in 2024 as the whole cybersecurity industry is under pressure following results from Palo Alto Networks, which suggested slowing industry demand for cybersecurity and the necessity for Palo Alto Networks to increase competitive pressure, offering free trials to attract customers. So that's brought pressure on the entire cybersecurity industry, Zscaler included. So investors are asking, is this decrease in stock price for Zscaler a buying opportunity? I'll answer that question here in this video, and I'll update my recommendation for Zscaler stock. Coming into this video, I did not have Zscaler stock rated as a buy. I have not had Zscaler stock rated as a buy all year. And so I'll update that recommendation here in this video. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So one of the areas of pressure for Zscaler and others has been decelerating revenue growth. This means that revenue is still growing, but at a slower rate. And you can see that here since peaking in 2022 at north of 60%, its revenue growth rate has been steadily declining here at 35% in its most recent quarter. Now, the industry overall is still growing and is expected to grow for the next decade or two. However, that rate of growth is slowing, especially given the rising demand for artificial intelligence. You might say, wait a minute, why is cybersecurity revenue declining when artificial intelligence is highly in demand? That would be a good question. And the reason is because companies, enterprises, and institutions are looking to cybersecurity as an area where they can cut some spending and allocate some of that money towards investments in artificial intelligence. Because for a business, there aren't too many areas where you have some discretion in cutting costs in the near term to allocate to a new category. And cybersecurity could be one area where CFOs in enterprises see an opportunity to cut back on spending, to call your cybersecurity provider and say, look, you got to offer me better terms or I'm going to switch or cancel or decrease. And I need this because I've got to allocate more money to artificial intelligence and I need to get it from somewhere. And you're the unlucky provider that needs to give me some slack here. And it's hard for cybersecurity companies to push back because, as I mentioned earlier, companies like Palo Alto Networks are seeing this as an opportunity to take market share. They're not seeing this as an opportunity to keep their existing customers only. They're seeing this as an opportunity of, wait a minute, what if in these conversations with our clients, instead of just offering them better terms on our relationship, we offered these customers a full solution and say, let us take control of your whole cybersecurity solution, not just the one or two modules that you're having with us. Let us expand our reach and we'll give you a deal. We'll let you sign up with us and we'll provide you all the service. And you don't have to pay us until all your contracts end with your existing suppliers. And so existing suppliers, one of which might be Zscaler, might come back and say, we can't match those terms, or we need to match those terms, or whatever the strategic decision might be. There's pressure on the industry now, whereas a year ago, 2 years ago, it seemed to be in this growth stage where there was more and more opportunity and rivals didn't need to fight with each other for market share or fight with each other to take customers away from each other. So this is a near-term issue. It's too early to tell how this shakes out, but longer term, over the next 10 or 20 years, the spending industry-wide on cybersecurity is very likely to increase meaningfully from where it is today. The industry is going to grow. It's just a matter of the rate of growth. And many of these companies that were used to growing at such a rapid rate, right, above 60%, have to come to terms of this slower growth environment for at least the next year and perhaps even longer. So that's the recalibration that's happening in the cybersecurity industry right now. And that's what's putting pressure on these cybersecurity stocks, bringing them down. It's just a recalibration of the rate of growth and not the growth overall. The industry is going to grow still. It's just the rate of growth is going to slow down because enterprises are looking to allocate more to artificial intelligence, and unfortunately, that's coming out of some of the budgets from cybersecurity. Now, Zscaler has done a phenomenal job in its cash flow from operations, rising to 34.15% in the last 5 years, up from 20% in 2019. They've done a great job in using that revenue growth and incrementally boosting its cash flow from operations to sales. And this metric is even more important when interest rates are higher, which interest rates have moved significantly higher in the last year. The cost of capital increases, which makes cash more valuable, not just because of the fact that investors are going to want to see you demonstrate better cash flow to give you stronger valuation, but this cash flow that you're generating, you can invest in super safe government bonds and generate over 5% rates of return. So cash has become much more valuable than 2 years ago, where if you had $1 billion in cash and you put it in the bank, you were getting almost nothing for that. Nowadays, if you have $1 billion in cash and you put it in the bank or you put it in government bonds, you can receive $50 million in cash for the year. And so that's a meaningful amount of money that you can get for your cash balances, whereas just 2 years ago, that was zero. It was non-existent. So Zscaler at 34.15%, this metric even more valuable today compared to 2 years ago. Now, for the next 5 years, analysts on Wall Street expect robust earnings per share growth for Zscaler at 38.21% average each year over the next 5 years. That's really strong earnings per share growth, more than 3 times the rate of the average company in the S&P 500 expected for the next 5 years. So like I mentioned, these companies, including Zscaler, are expected to continue growing. The rate of growth has slowed, that's to be sure, but they're still expected to grow significantly over the next several years. And finally, the valuation. When you look at Zscaler, its forward price to earnings ratio of 54.35 is not cheap. The stock is not cheap trading at this valuation of 54.35. Now it's down. Given the stock price is down, it used to trade at a forward price to earnings of close to 80, and now it's at 54. So it's a more reasonable valuation. However, if I was to update my recommendation on Zscaler stock and answer where is the stock right now, is it a buy, is it a hold, is it a sell, is it a buying opportunity on this dip? I would say almost. I would say if I was to rate Zscaler stock right now, I would say it's a borderline buy, and I'm updating this recommendation today, April 15th, 2024. It's almost there. If the valuation were to come down more, I would upgrade this valuation to a buy, not on the borderline. Or if the company's next quarterly earnings report demonstrates continued growth and slows down that deceleration in revenue growth and demonstrates better improvement in its cash flow from operations and stronger customer retention, then all of those could be reasons to upgrade the stock to a buy. But right now it's on the borderline. So if you're really interested in Zscaler stock, then it's not a terrible idea to dip into it and start nibbling on some shares. If you're interested in the cybersecurity industry overall, my favorite stock in the industry right now is Fortinet. Out of all of them, if you're considering Zscaler, CrowdStrike, Palo Alto Networks, or Fortinet is my favorite right now. Fortinet is my top stock in the cybersecurity industry to buy. But Zscaler also up there in the rankings as well, on the borderline of buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.